Hello friends, welcome to EPG Pathshala. I am Professor S.P. Singh from Faculty of Management Studies, Gurukul Kangdi University, Haridwar. Today we are going to study Module 31 on incentives and reward systems. Friends, after studying this module, you shall be able to know the concept of incentives, understand the methods of wage payment, comprehend different types of incentives, become aware of the individual incentives, know the team-based incentives, and understand the organization-based incentives. Incentive plans contemplate a basic rate, traditionally on time basis, applying to all workers, and incentive rates payable to the more efficient among them as extra compensation for their meritorious performance in terms of time, cost and quality. The incentive rates may take the forms of bonus or premium. Bonus means payment to workers of the complete benefit resulting from reduction in cost and time as well as improvement in quality. Premium involves the benefits resulting to the firm due to higher output or better quality is shared on an equal basis or on some agreed criteria between the management and the workers. The concept of wage payment is important not only for the employees but also for the employers who are interested in paying fewer wages. But paying low wages can be costly for the employer. It is also the moral responsibility to pay fair wages to his employees. Usually, there are two basic methods of wage payment. One method relates to the hour the employee spends at work, irrespective of his output. The other method is related to the output. The other methods, incentive schemes, are merely variants of the two or combined with time and piece rate systems. In this method, worker is paid for the amount of time he has spent on the job. The time may be an hour, a day, a week, or a month, and the wages are based upon the period of time. Here, wages are paid for the amount of time spent and not on the basis of output. Thus, it is a non-variable method of wage payment. Wages are is equal to number of hours worked multiplied by rate per hour. Time wage system is used when it is difficult to determine standard time for the job and the production process is complicated, requiring high degree of skill. This method is simple to calculate the time worker spends on the job. When the quality of the product is important, it is better to use this method rather than piece wage system. Under this method, there is less wastage of material as well as of machinery as the worker is not in hurry. All the workers are paid as per the time spent by workers, not on the basis of production. So, this ensures the equality of wages. The workers feel secure with this method as they are paid irrespective of whatever is the production. This method suffers from several disadvantages as under this method the workers slow down their work as there is no pressure of making required amount of pieces. This method requires strict supervision to ensure better productivity. If the workers make more production, in that case also they are paid fixed wages as per the time spent by them in the job. The piece rate system is a system of wage payment in which the workers are paid on the basis of output produced. It does not consider the time spent by the workers. Piece rate system is the method of paying remuneration to the workers according to the number of units produced or job completed. Total wages earned are equal to total units of output produced multiplied by rate per unit of output. Piece rate system does not ensure production of quality output. It does not ensure a uniform flow of output and makes it difficult to control the production schedule. It is difficult to determine reasonable piece rate for each item of output or job. Piece rate system adversely affects the health of the workers. It increases supervision cost for quality assurance and effective use of materials, tools and equipment. Individual incentive plans attempt to relate effort to pay. Popular approaches include piece work plans such as Taylor's differential piece rate plan, Merrick's differential piece rate plan, standard hour plans such as Halsey plan, Biddock's plan, Emerson's plan, etc., merit pay raises, lump sum merit pay is sales incentives and commissions. Taylor's differential piece rate system provides for two piece work rates. One is lower and the other is higher. The standard of efficiency is determined either in terms of time or output based on time and motion study. If a worker finishes work within standard time, he will be given high piece rate. If the output of a worker is less than the standard output, he is paid a low rate and vice versa. In order to remove the severe effect on the marginal worker, Merrick came out with a multiple piece rate system with 3 piece rate. The workers producing below the standard output are not penalized by the low piece rate. In this scheme, up to 80% of the standard output, workers are paid at the ordinary piece rate, 83 to 100 at 110% of the ordinary piece rate, and above 100% at 120% of the ordinary piece rate. Halsey plan recognizes individual efficiency and pay bonus on the basis of time saved. The plan fixes a standard time for each job. Time rate is guaranteed. If the job is completed in less than the standard time, the worker is paid a bonus of 50% of time saved at the time rate in addition to his normal time wages. The Rowan plan pays the bonus on the basis of time saved, taking into account a proportion of time saved to time allowed. The Gantt task and bonus plan combined time, piece and bonus systems where day wages are guaranteed. Standard time for task is fixed and both time wages as well as a high rate per piece are determined. A worker not finishing the work within the standard time is paid on time basis. If he achieves the standard, he will be paid time wage plus a bonus at fixed percentage of normal time wage. In the event of exceeding the standard, he is paid a higher piece rate. Beddock's plan expresses every operation or job in terms of so many standard minutes called Beddock's points. Each point represents 1 minute through time and motion study. Up to 100% performance, a worker is paid time wages without any premium for efficiency. If the performance exceeds the standard, 75% of the wages of the time saved is paid to the worker as bonus and 25% is earned by the foreman. A bonus is an incentive payment an employee receives beyond standard wage generally given at the end of the year and does not constitute part of the base pay. In addition to these plans, there are merit pay, an individual incentive plan, lump sum merit pay, and commission for salespeople. The plans are criticized on the ground that in an attempt to produce more, employees may sacrifice quality and rush up everything, leading to increased accidents. Team-based incentive plans provide benefit to all team members in an equal way on the basis of performance of the team members. An objective standard is used to evaluate performance. These incentives foster cohesiveness among team members and motivate group members to behave and think as a unit. Tying the performance of those who contribute little to those who turn out exceptional performance to a common measure may become a bone of contention between team members. Organization-wide incentive plans provide incentives to employees on the basis of the achievement of the organization over a given period. These plans seek to promote a culture of ownership and cooperation, teamwork, and a sense of belongingness among the employees. Three basic types of organization-wide incentive plans are profit sharing, gain sharing, and employee stock option schemes. The purpose of profit sharing plans is to generate goodwill and a feeling of partnership between employer and employee. Under profit sharing plans, employees obtain a share in the profits of a company each year. This can help to fund their retirements. All the money contributed to a profit sharing plan accumulates tax deferred. Profit sharing attracts business owners because of its flexibility. Employers can opt how much to allot to employees each year on the basis of the amount of revenue taken in. However, during a bad year, the employer has the choice to give very little or no profit share at all to the employees. Employees are usually enrolled automatically in profit sharing once they become eligible. Companies can choose eligibility requirements based on age and years of service. Typically, companies establish vesting schedules to dictate how long workers be employed to claim profit sharing contributions on their movement to another job or retirement. Once employees are entirely vested, they may take the entire amount contributed on their behalf and roll it over to an IRA or to a new employer's qualified retirement plan. Participating in a profit sharing plan allows the employee to withdrawing funds after age of 59 years without incurring a tax penalty. Withdrawals are taxed as ordinary income. Early withdrawals may be allowed in some plans. Profit sharing provides greater flexibility when it comes to decide the terms of early withdrawal than do administrators of other plans. Gain sharing is a system of management seeking higher levels of performance through the involvement and participation of its people. With the improvement in performance, employees' share increases in the gain. It involves a team approach, often including all the employees at a site or operation. An employee stock option plan is an employee's benefit plan. Under employee's stock option plan, the eligible employees are allotted company's shares below the market price. Friends, in this module, you have studied the concept of incentives, methods of wage payment, types of incentives. Thanks for visiting EPG Pathshala.